Right, morning everybody. Right, let's do this thing. S&P. So we had a really strong run by the S&P sort of as we were closing, and up to about 2 hours before the US close. Most of that was due to strong retail sales, which rose more than expected, and jobless claims as well. Once those numbers came out, the US market really ran, but couldn't hold it. Last 2 hours giving away most of it, and futures down another 5.5 points this morning. So not the best start to the day. Concerns that opposition to a spending bill in the House of Representatives will also led to concerns that that there'll be a government shutdown, which also dampened sentiment. So that could have also contributed towards the sell-off at the end of the day. And then stock-specific news: apparel maker Lululemon rose sharply after releasing third quarter earnings that beat analyst estimates. Out of Asia, a little bit of a mixed bag. Nikkei stronger on a bit of a weaker yen. Aussie down slightly, led by the miners. We've got Billy's, which is down again. Really struggling at the moment. Rio as well, down almost 2%, I think. On the upside, we have Tencent out of Hong Kong, which is up a little bit, which hopefully will help Naspers a little bit, but it has come off the high as well, so we'll see how that closes. Charts of interest from Nedbank this morning, just giving an idea of what the different ratings actually mean. So Fitch and S&P announcing later today, so that's something we can look out for. At the moment, we are ranked triple B with Fitch, triple B minus with S&P, and Baa2 with Moody's. So we can see that equates to lower medium grade. So keep an eye out for that Fitch and S&P announcing later. See if we can hold those statuses. No corporate action today. At 6:30 we had Japanese industrial production, which came out slightly lower than the prior number. Chinese retail sales, which was a little bit better. We also had industrial production out of China, which came in slightly lower at 7.2%. 12 o'clock we have industrial production out of the Eurozone. At 3:30 we got PPA final demand year on year out of the US, and a University of Michigan conference. All right, let's have a quick run through the maps. We'll start off with the Aussie again. All right, so yesterday, let's just zoom in a little bit here. We showed how the Aussie was making lower lows sort of every day over the last week. Yesterday was no different. We had a pretty big sell-off, even though the S&P was rallying and most of Europe was rallying. The FTSE also struggled, which didn't help us. But yeah, as I said yesterday, sort of getting into closeout, guys are getting worried. Option strike levels are getting broken, so that's caused a little bit of the selling. Right now, Aussies are at 42,360, so down 178 points from yesterday's open, from yesterday's close. So the first stock I wanted to show, well, the stocks is BGA and Nedbank, so the two banks. BGA breaking a bit of a level here. They've been outperformers, so they haven't necessarily been easy shorts, definitely not. But we've got a possible low target here out of BGA. The range is about $8 or $9, so look for possibly $8 or $9 from 75, which would take us down to around sort of the 67, 68 level, possibly on BGA. I'm not saying it's definitely a short, but if you're looking to pick up any of these banks on pullbacks, maybe be a little more patient and wait for a little bit more pullback, or wait for a reversal back above those levels. As you can see here, Nedbank quite similar. It's a bit of an ugly head and shoulders here, with the neck line being at 236. The height of this channel is around also $8 or $9. So possibly a move to 228, which would line up with the 200-day moving average on Nedbank. All right, so let's have a look at Mediclinic. Mediclinic actually, despite yesterday's weakness, put in a bit of a positive day. I think it closed down a little bit at the end or in the auction. So it wasn't a great breakout candle, only sort of closing halfway on its daily range, but still a bit of a breakout nonetheless. So keep an eye out. If we get a little more strength over the next couple of days on Mediclinic, this sort of flag could be validated and we can move higher towards the end of the year. Obviously, one that everybody's looking at the moment is Kumba. Guys are wondering, if they should be trying to pick bottoms. It's probably not a good idea. The immediate range that we're looking at the moment is between 300 and 260, which is a 40 rand range. It broke out mid-November. Tried to regain the level, but couldn't. Tried actually twice, and two sort of big up days to try and break that level, but they couldn't hold it. Right now at 240, the previous range that it broke down from is 40 rand. 40 rand from 260 is 220 would be the target. So currently halfway to the target from that breakdown. And the last one is going to show is Sanlam. Sanlam released a bit of a poor trading statement a few days ago, maybe a week or two ago now. I wanted to actually have a slightly shorter term chart, but it's okay. We'll look at the daily. If I zoom in a little bit here, we can see those big down days on that report. We've currently been flagging between sort of the 60, I guess 7 on the lows and just above 70 on the highs. If we get a break or close below 68, I would say that downtrend could possibly resume. Well, not downtrend, but sort of the reversal could possibly resume, and that would maybe send us closer down to the 200-day moving average, which is currently at about 62.5 and rising from there. And that's all for today, guys. Good luck trading.